The widespread adoption of electric cars is a huge market, and the clear winner as of now is Tesla. But there is more competition coming, especially in different countries like China. NIO is a Chinese electric car company and is said to be the next Tesla. In this video, we're going to compare both Tesla and NIO and see what advantages they have over each other, and ultimately decide if NIO is going to be as big as Tesla. We all know Tesla and how they are destroying the competition in the electric car market. In the US, they have an 81% market share in electric vehicles, which is insane. This can change as other manufacturers come out with better electric vehicles that are more appealing, but at the moment they are way ahead of the game, and it shows in their total market share. Tesla is looking to start expanding outside the US, and China is one of the biggest markets for electric vehicles because they have strict rules on emissions. The car market has also been exploding in China, as more and more of their population now owns personal vehicles. However, Tesla isn't the only game in China building electric vehicles. NIO, which is a Chinese auto manufacturer, is also making their own electric vehicles. NIO is only 5 years old and is offering 3 main vehicles in their lineup, not including their sports car, the EP9, which they only sold 15 of, so we're not going to count that. The rest of the lineup consists of 3 SUVs, the EC6, ES6, and ES8, ranging from $52,000 all the way up to $67,000 depending on the model, while Tesla's lineup is the Model S, 3, X, and Y, running from $35,000 to $100,000 depending on the model and features. I think NIO's biggest advantage over Tesla in the Chinese market is actually being a Chinese-owned company, as the business laws in China can be very strict. If the government doesn't like what your company is doing, then they can easily shut you down. Also, if you talk bad about the government or don't align with their views, they can also shut your company down. This happened recently to Jack Ma, the founder of Alibaba and Ant Group, which is a fintech company. Jack Ma talked openly about his disapproval of the Chinese banking industry, and the Chinese government rejected Ant Group's IPO because of this. The Chinese government has total control of all business that operates within their country, and you have to play by their rules if you want to get ahead. NIO is natively a Chinese manufacturing company, and this can be a big advantage it has over Tesla in the Chinese market. NIO actually contracts out the manufacturing of their vehicles, though, to a Chinese state-owned automaker, JAC Motors, so they rely heavily on the Chinese government for their infrastructure. They had plans to start building their own manufacturing plants in Shanghai, which is where Tesla is currently constructing their 3rd gigafactory. However, these plans were cancelled in 2019. This could be a big hurdle for NIO if they want to stay competitive with Tesla, because NIO has to pay JAC Motors a fee for every vehicle it builds. This is killing their profit margins. We saw Tesla be able to increase their profit per vehicle to almost 30% as their factory process got more efficient. NIO, on the other hand, has a profit margin of around 9.7% per vehicle, and a portion of this issue is having to pay JAC Motors and not being able to control the manufacturing process as much as if they made their own manufacturing plant. NIO also guarantees JAC Motors against any losses, so this means that if there's an issue with the manufacturing facility and production gets delayed, NIO still has to pay JAC Automotive. NIO does have plans to expand into the US market eventually, but the recent US and China trade tensions have slowed this push. However, in what now seems like a Biden presidency, these plans might be happening sooner than expected, as trade relations between the US and China will most likely cool off under the new administration. For now, though, their cars are only available in China. NIO is also focusing on self-driving just like Tesla. NIO is currently using Intel's Mobileye platform to start building out their own self-driving capabilities. Tesla previously used Intel's Mobileye for their first versions of their self-driving system, but now use their own proprietary system. Self-driving is one of the biggest technological advancements in the automotive industry. Now all car brands have their own version of self-driving, from Tesla's Autopilot to Cadillac's Super Cruise. It is good to see that NIO is doing the same, and is starting to develop their own self-driving system. NIO delivered over 10,000 vehicles in China in Q2 2020, compared to Tesla, which delivered almost 30,000 vehicles in China alone in Q2 2020. However, NIO is only a 5-year-old company and is still ramping up production. This is the same thing Tesla was struggling with when they first started out. The more cars you make and the faster you can make them, the cheaper the cars become, and you start to see profit margins expand. This is why Tesla has almost a 30% profit margin on their vehicles. Ramping up production is difficult though, and doesn't happen overnight. It took Tesla years to get to the numbers they are producing now, and they weren't using a state-controlled manufacturing plant. Ramping up production might be difficult for NIO, as they aren't in full control of the manufacturing process, but we will have to wait and see if they can execute on this. Let's dive into NIO's financials and see how they are doing. After all, a company is nothing more than an idea if they don't have the financial backing to execute on their plans. NIO in Q2 2020 had revenues of $526.4 million US, which is 146.5% year-over-year growth. However, they are still losing money and lost $171 million US. NIO's revenue growth is great, and as they continue ramping up production, they will hopefully become profitable. This is the same thing with Tesla, as they were not profitable for some time. Now they are constantly profitable quarter after quarter, as their production and profit margins increase. NIO is a high growth company, and them losing money as of now isn't that big of a deal, because their car production is still growing, and their revenues grew over 100% year over year, which is great to see. NIO is definitely becoming a strong competitor to Tesla, but as of now, Tesla is definitely way ahead of the game, even in China. As Tesla's Shanghai factory becomes up to full capacity, they're going to start gaining more and more market share in China. If NIO doesn't start ramping up production soon, it might be too little too late, as Tesla continues to quickly build out their Chinese infrastructure and will continually deliver a cheaper and better product. NIO's reliance on a third-party manufacturing plant is also a big issue going forward, as they won't have the capability to create their specific manufacturing process just for their vehicles like Tesla does. This might also make them slower to adapt and bring out new technologies. Tesla, on the other hand, has full vertical integration in their manufacturing process. Also, NIO's reliance on Mobileye for self-driving might not be as good as Tesla's autopilot. Since Tesla uses their own chipset and system, they have the ability to customize their software, specifically to their own vehicles. All this reliance on other companies might be NIO's downfall, but they are still growing and expanding their vehicle deliveries. We still have to wait and see if NIO can ramp up production and have the ability to bring profit margins up and start turning a profit. At least NIO is able to produce and deliver electric vehicles, unlike some other electric car companies we know. And who knows, the Chinese government might step in and give a huge advantage to NIO in China over Tesla. At this point though, I think the stock is too highly valued, at the current price of $40. If the price of the stock falls significantly, it might be a good hedge against Tesla in China. And with that being said, as always, thanks for watching, and like and subscribe to see more videos.